Everybody, this is Patrick MontesDeOca with the live trading talk segment here for November 23, 2021. I want to watch the market here for the first few minutes. We have Bitcoin negating the bearishness of the market here and activating a bullish price momentum. When the price trades above the average, which is ingrained here for the day, it activates a bullish price momentum for the day. And the target is 58,708. Gold is down 1590 to 1790, and it has activated a buy signal from the buy one level of 1788 for the day. The target is 1819. We are trading below the weekly average of the buy two level, of 1821, and this has neutralized the weekly when it closed below it at 11:22, 8:15 a.m. This has been the weekly targets that we've been working with, and when the price comes down and closes below that, it goes neutral. So it went neutral by the close below 1821 and activated a bearish daily price momentum with a target of 1788, which was completed at 5:15 a.m. on the 23rd today. Now we're looking at the short term, the daily, which is the early curve of the cycle, telling us that it has activated now a buy trigger with a stop at 1788. For conservative traders, you can use the stop below 1788. Or you can use a maximum dollar stop based on the comfort of your profile. Or you can, if you're a multiple trader, look for the price to, if it comes down to 1771, add to your position and put your stop on a close below 1771. The gold market is approaching levels that are indicating accumulation of supply. The silver market is down 80 cents, also following the same pattern of the gold market, by going neutral on a close below 2403. This happened last night about 12:30 a.m. So for those traders that are, overnight traders, you can execute the signals overnight. For those that are day traders, you have to wait until the market opens here in the US, and then you can see and take a look at where the price is in relation to the daily numbers if you're looking for day trading. The weekly numbers are for swing and as well as day traders, but primarily to use it for a swing, indicating obviously the intermediate aspect of the market. The daily is the daily cycles for day trading. The weekly is the intermediate, and the monthly is the longer term outlook and prospects of the market. Now, one of the things that I want to take a look at, but before we do that, I want to share a report that we published on Seeking Alpha and review basically for silver specifically what the VCPMI was anticipating. We'll take a look at the current market, where it is, and what happened with that outlook, and what are we looking for moving forward from here. This is the Weekend Podcast for November 20th, 2021. How to trade silver profitably using the VCPMI. Summary. The Variable Changing Price Momentum Indicator, VCPMI, helps us identify the momentum of the market, not the price. The price is a consequence of the momentum. In our live trading room, we teach our subscribers how to use the VCPMI to identify the momentum of the market. How to trade silver profitably using the VCPMI. We have a couple of reversions unfolding in gold and digital assets. Gold is up 230, trading above the average price for the day. Silver is up 8 cents and is trading above the average price of $24.97. It is trading around the average price. Silver and gold are activating bullish price momentum indicators. The Variable Changing Price Momentum Indicator, VCPMI, helps us identify the momentum of the market, not the price. The price is a consequence of the momentum. If a market is trading around the average price, there is a 50-50 standard deviation or a 50-50 chance of it going up or down. The market is looking for a direction of momentum. By applying mean reversion trading principles, once we identify the average price, the algorithm extrapolates the extreme of that volatility within that structure of 5 pivot points. In our live trading room, we teach our subscribers how to use the VCPMI to identify the momentum of the market. We use a Fibonacci perfect structure of 5 levels. Within those levels, we activate trigger points. They help us identify the highest probability trades. We don't care which way the market goes. We watch the markets to go to extreme levels and then trade at that level when the reversion to the mean is the highest probability. As a trader, we look for the extremes and then trade at those levels, which have a 90% buy one or sell one level and a 95% buy two or sell two level probabilities of the market reverting from those levels back to the mean. Especially when you are trading, you want to identify the structure of your trade so you have the odds on your side. The VCPMI is a combination of 4 or 5 classic technical indicators all combined into one powerful tool. The AI then takes the analysis and produces a probability so you know when to enter a trade and when not to enter a trade, as well as when to take a profit or even when to take a loss. In silver, the VCPMI identified the average price as $24.97. The market is trading above the average price, but there is no trade because it is near the average price. Day traders would not have a position now. Swing and position traders might, but not day traders. Silver has activated a bullish price momentum with a target of 25.15, which is the next level or target. When activated, when touching it, it will complete the bullish pattern. The more the price rises, the higher the probability that we could see supply come into the market. The VCPMI tells you where to expect supply to come into the market. When silver trades below the average price, the VCPMI gives you a target below. The buy one and buy two levels are below the mean and are the targets below. We are now in a bullish pattern for the day for silver. We are building a bullish pattern for the week as well. By closing above 24.97, which was the average weekly price, the bullish weekly momentum was activated. The momentum can take us to the sell one level of 25.01 on the weekly signal. The daily signal activated the target of 25.15 initially. If the market trades about 25.15, this level of resistance would become support, and the next target is 25.44. The reverse will occur if the price closes below those levels, which would negate the bullish price momentum. The AI behind the VCPMI says when you are trading around the average price, expect choppiness. We want to see the market either coming down to the blue levels, which identify accumulation of supply between 24.65 and 24.47, or going up to new highs near the sell levels of 25.01 or 25.15. Either of those levels, high or low, indicate a good level at which to go short or long. The VCPMI code was written in C++ easy language. Here, we are recapping the methodology that we teach at the Equity Management Academy live trading room to use the VCPMI to trade the markets. Silver is just one example of the markets that we trade. The VCPMI does a lot of the work for you. It serves as a GPS for your trading. Gold. Precious metals have been in an anomaly for the past 12 months. They are inverted compared to the fundamentals, so it has been frustrating for bulls. Precious metals are not in a bear market. We made a low on March 16, which was the start of the bull market. Silver and gold then reverted from the lows in March 2020 to the new highs of almost $30 for silver. The markets were discounting the tremendous stimulus that came into the market and probably wanted to see what damage the pandemic had actually caused. Silver then went into a correction pattern until the Reddit crowd came in and pushed silver back up to $30-35 an ounce, catching a lot of shorts by surprise. It was a higher high, and then silver went into another corrective pattern with a new low on September 27, 2021. We published on September 28 that we expected a seasonal low. Now we are in a third leg of the bull market in silver. This is not a bear market. It is a correction within a bigger bull market. The third leg should equal the first leg, so we are looking at a move to almost $30 from the low of $21.41, roughly $50 silver target for the third leg of this bull market. Silver. I hope this explained the VCPMI methodology for using it as a GPS.
We're back live here with Bitcoin, trading last at 57,295, up 1,480, negating the previous bearish price momentum and activating a bullish price momentum. The average price defines the momentum of the market above or below. And what I'm looking to do is trade the extremes above or below the market. I'm looking for day trades with high probabilities. The gold market is into that area where it's in blue. It's activating buy triggers. We are entering and interested in buying triggers in this area of 1788 to 1771. This is the highest probability area to accumulate long positions, or if you have multiple positions to enter, these are the levels that you want to use. A close above 1788 activates the buy one level, and conservative traders can use the close below to protect this position conservatively. But there are 3 stops that we recommend according to your profile. A close below is for conservative. A hard dollar stop is based on your profile
and a close below 1771 would be the high risk maximum stop, and also to add to your multiple positions on the long side if the signal is activated. So depending upon the risk, based upon your profile, you can manage this position, this signal. One of the fundamental comments here that I want to make after Chairman Powell was renominated once again is the bearish sentiment that the market has interpreted from his renomination. Very much and very similar to what happened back in June, when all he did was talking about tapering, with the idea and the belief that inflation is going to be transitory, and continues to believe that this inflation will decline, will abate in the next few months. One of the comments that I want to make is that we are entering a pretty crucial point in time in our monetary system when we have the money supply exploding at record levels. We have record debt running at 130% of GDP. Globally, we're in a situation where we're experiencing inflationary pressure, price pressure. We're looking at monetary inflation because of the stimulus that is necessary, that has essentially been created. Money, currency, fiat currency that has been created out of thin air, which has in essence reduced the purchasing power of the underlying currency. No matter what currency you're looking at, if you print more fiat currency based on the law, or the basic law of supply and demand, you are going to see that reflected in lower prices, which means that in terms of a currency, you are reducing its purchasing power. And I want to make a comment that Turkey this morning essentially reached 20% inflation. Their central banks have lost control of the monetary system, and we are running into hyperinflation now in Turkey. So, if you are dealing with this level of debt and continues to reduce, again, the strength and the integrity of its currency, in this case, we're talking about the US dollar, it only aggravates the problem deeper, in a sense that it forces basically the currency to decline faster on top of a price inflation spiral that we're dealing with that seems to be running a bit out of control. Unless we get this so-called bottleneck of supplies relieved, this inflationary pressure on price inflation is going to continue for a few months, particularly if the consumer is willing to pay for these higher price adjustments that we are making in the economy. In addition to that, we have wage price pressure.
building. As the standard of living declines, and it has declined by 30% so far, as the government continues to print more money. The gold market has been affected recently by the amount of short selling that has been done in the paper market by central bankers that have a short exposure of over $40 billion. And hopefully, as they have artificially brought the price down here, as we're looking at silver down all 86 cents, way below the B2 level, way below the daily level. These are extremely undervalued levels that we're looking at. And the expectations of a reversion to unfold from these levels are above 95%. That we're going to see a reversion back up to potentially that 24.91, which is the weekly average for the rest of this week. And I believe Bitcoin is leading the way in terms of the anticipation that the US dollar is going to continue to erode, as the reality is really that the government cannot raise interest rates in this environment. They may talk about it, they may taper as they have begun, but as far as interest rates are concerned, it's impossible. There are a couple of choices. Either the market itself is going to dictate higher interest rates, particularly if we get a downgrade on the ratings of US bonds, or they cap basically the short end of the market, they cap the long end of the market, the 30-year bond, as they allow the short end of the market to invert in the yield curve, thus bringing interest rates short term higher while they cap the 30-year bond, as where most of the debt basically exists. Thank you once again, everybody, for the opportunity to share this with you here, and I look forward to seeing you next time. In the meantime, be well, take care, and I will speak to you soon.